IRS agents with AK-15s ready to shoot, a supersized IRS army declaring war on political enemies, an army of 87,000 IRS agents coming for you if you earn less than $75,000 per year. There's a lot of hype right now about the IRS provisions in the Inflation Reduction Act that was recently signed into law. And while I don't think you should blindly believe all of the inflammatory and polarizing things people are saying about the plans of the IRS, I don't think you should act like everything is okay and that it's not going to affect you either. Hey, my name is Mark too, and I'm a CPA who helps resellers and online businesses with their taxes and accounting. And I want to talk to you about the Inflation Reduction Act. The law is going to cost over $400 billion, and most of that is planned to be invested in energy security and climate change efforts. So then the question is, how is the government going to pay for all that? They say the main way is going to be through prescription drug pricing reform. Next, they're imposing stricter laws on corporations who make over $1 billion. And in addition to that, they're going to be giving about $80 billion to the IRS so that they can modernize their systems and beef up their tax collection enforcement efforts. And I'll talk more about that in a second. First, I just want to mention the new tax laws for the billion-dollar corporations. So one thing you know if you've gone through either my bookkeeping or tax course is that companies essentially have two sets of books. You have your business books that you report to your shareholders and banks, and you have your tax books that you report to the IRS. So what happens is that these companies are showing billions of dollars of profit on their books and financial statements, but because of things like carry forward losses or accelerated depreciation deductions, their taxable income on their tax returns is often much less than their book income, which means that they may be paying a lot less tax than you might think. So what the IRS is saying is that they're going to impose a minimum 15% financial statement income tax. And this is a big deal. They're in a way throwing out all the tax laws and saying, we'd rather tax that number over there on your financial statements. It's similar to how you aren't taxed on your total income. There are certain deductions that reduce the income that you're ultimately taxed on. So let's say you make $30,000 and you're married with kids. Because of the standard deduction in child tax credits, your taxable income would end up being zero, so you don't owe any tax. If the government did to individuals what they're doing with these billion-dollar businesses, they'd say, we're not going to use your taxable income of zero. Instead, we're just going to tax your W-2 income of $30,000 by 15%. Not a perfect analogy, but I want to give you a sense of what they're doing. If you think these companies are going to happily sit back and eat this cost, I think that might be a little too optimistic. Their job is to maximize the return on investment for their shareholders. They might reduce their workforces, and they'll likely pass on much of the cost to us, the consumers, regardless of whether we're lower income, middle income, or high income. So I'm not sure inflation reduction was the most appropriate title for the bill. It could probably more accurately be called the Clean Energy and IRS Funding Act. Okay, so now let's talk about this new IRS army. Again, I don't think it's all good, but I don't think it's all bad either. So stay calm and let's just talk through it. The IRS currently has just under 80,000 employees. The Treasury has projected hiring 87,000 new employees, but that's over the course of the next 10 years. So it's not like tomorrow there's all of a sudden going to be 160,000 IRS agents out there hunting down small business owners. At least 50,000 of their current employees will be eligible for retirement within the next 5 years. So in total, I'd say we're looking at an average net increase of about 30,000 IRS employees. The IRS is getting $80 billion, but that's not all going to audit enforcement. About $5 billion is going toward modernizing their systems. And I think this is a good thing because it's extremely inefficient dealing with the IRS. The wait times, the snail mail, the faxing, it's really painful. $25 billion is going toward operations, and $45 billion, just over half of the total, is going toward enforcement. In other words, audits. So let me get this straight. We as taxpayers pay into the federal government so that the government can allocate $80 billion of those dollars to the IRS so that they can ramp up their audits and tax enforcement to try and collect $200 billion more dollars from us over the next 10 years? Exactly. Now, are they coming after lower income, middle class taxpayers, or small business owners? They say they aren't, but let's take a look. The Secretary of the Treasury, Janet Yellen, wrote a letter to the Commissioner of the IRS and confirmed her commitment that small businesses and households earning less than $400,000 per year would not see an increase in their chances of being audited. Prior to that, the Commissioner of the IRS wrote a letter to the Senate acknowledging the Treasury's directive that audit rates would not rise for households making less than $400,000. That's all well and good, but guess what? That isn't mentioned anywhere in the actual law. So it's basically a handshake deal not reflected anywhere in the actual contract. The good news is that we can trust everything politicians tell us, right? If we look at historical audit rates, we can see that more than half of the IRS audits in 2021 were of taxpayers with incomes less than $75,000. Now, I see two main reasons for this. One is that at lower income levels, it can be pretty easy to abuse the tax law and get a lot of money from the government in the form of refundable earned income credit. So I do think there's some justification there. But on the other hand, it's just easier. It's low-hanging fruit. If you're an IRS auditor, are you going to go gravitate toward the quick wins or the extremely complex 5,000-page tax returns of corporations and high net worth individuals? The Treasury itself has said that there has been a sustained decline in its workforce, particularly among specialized auditors who conduct examinations of high income and global high net worth individuals and complex structures. So even if they wanted to audit more complex individuals or entities, they just aren't experienced enough to know how. Another thing that makes me skeptical that the middle class and small business owners won't be affected is the fact that the threshold for the 1099K was recently reduced to just $600. And you can check out my 1099K video for a refresher on that. People selling on eBay, Poshmark, Amazon, whatnot, or any online platform who will now be getting 1099s in the $600 range are typically not in a household bringing in over $400,000. So we already know the IRS is still very heavily focused on lower to middle income households. They say they aren't for this particular bill, but time will tell. So believe them, don't believe them, but regardless, what you can do now is prepare. And the best way to do that is by educating yourself on what you need to do. Keeping good records is going to be even more important. And I want to highlight that you should be doing this anyway as a business person, just so you can be familiar with your business profitability and the decisions you need to be making to meet your business goals. But it's also going to be important so that you can have peace of mind, so that if anyone ever does inspect your business, you'll have nothing to fear. When you have decent records in place, audits are really not that bad. People have sent me emails that they literally vomit and lose sleep over this stuff, but I can guarantee it doesn't have to be that way. Get your records in place and get a basic tax education. There are tons of free resources out there. You just need to make sure it's coming from a valid source. And you can also check out my Bookkeeping Basics for Resellers course or my Reseller Tax Academy in the links below. These will give you the foundation of what you need to feel a lot better about your business and tax situation. Subscribe for more videos where I'll talk more about how to get your taxes and accounting on track in your reselling business, and check out @NotYourDadCPA on Instagram for more tips and behind the scenes. Use the links below for more resources to help you optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.